Hi everyone, let's talk about the US housing market and mortgage market. Last year, we saw a significant drop in the housing market due to a sharp increase in mortgage rates. However, despite this, home prices remained relatively unchanged. Last June, we started to see a decrease in home prices, but even so, prices are still higher than they were a year ago. The good news is that demand for homes appears to be coming back as a result of a slight decrease in mortgage rates. According to CoreLogic, in December of last year, U.S. home prices were 6.9% higher compared to the same time the previous year. This is the lowest appreciation rate we have seen since the summer of 2020. On the other hand, last April, home prices rose to a high of 20%. The reason for the drop in home prices was due to a combination of factors such as inflation, job cuts, and uncertainty in the economy, along with the barrier of high mortgage rates. However, when mortgage rates started to decrease in December, home prices immediately followed suit. The drop in prices has slowed down, but not as much as it had before. According to Selma Hepp, the chief economist at CoreLogic, some of the exurban areas that saw a rise in prices during the pandemic are now experiencing larger corrections. But she doesn't think this will last for long. A recent survey by Fannie Mae showed that the sentiment for home buying has increased for the third straight month in January. Despite this, consumers still expect to see prices either fall or remain flat in the coming year. However, the percentage of people who believe it's a good time to sell a home has gone up to 59% from 51%. Real estate agents have reported an early surge in the spring housing market, with more people visiting open houses and a return of bidding wars. The nation's homebuilders are also reporting an increase in demand, and lower mortgage rates are the driving force behind this. The National Association of Home Builders Home Affordability Index is at its lowest level in the past decade, but lower mortgage rates are starting to turn things around. If home prices continue to decline at their current rate, we may see negative annual home price growth in the next 3 months. Lastly, mortgage applications to purchase a home, which is a great indicator of demand, have increased in January and the first week of February. Although it is still lower than the same period last year, the decrease in mortgage rates and home prices have definitely contributed to the increase in demand. However, affordability remains a challenge in much of the market. So there you have it, a brief overview of the U.S. housing market. The good news is that there are definite signs of an uptick in demand. And with mortgage rates expected to continue to decrease later this year, we can expect to see more buyers coming back into the market.